We want to make this conversation very engaging. We've been talking a lot about investing on the continent, what green financing, what blended financing, what TA support looks like, but we've not really dived into what that actually looks like. What does GHISP actually do? What does the outcome or the effect look like? So today, we're going to speak much about this alternative investing ecosystem that we've been talking about. We know it's fast growing. We know a lot of DFIs are coming on board. We're saying that there's a lot of catalytic impact. We're saying there's a lot of money that is coming in to support SMEs. We're seeing there's deal flow. Someone told me that deal flow is like a gym membership. At the beginning of the year, everyone has one, but no one knows how to prove it. You know, we're saying there's technical assistance. What is technical assistance? Someone thinks it's workshop, someone thinks it's extra jollof. So at this point, we're going to have a discussion. I call these guys here the ecosystem power rangers. I think the colors too are doing the job. We have the money man, that is Jacob, the investor here. We have the SME, that is Derrick on my left. We have the technical assistance provider or the transaction advisory provider, that is Bridget from Pangea. And then we have the brightest lady in the room, as you can see, lady in the middle with the yellow matching with the sunshine, the CEO of the GVCA, Amma Gyampo. Let's start. Jacob, we know you're a very busy man. You have a lot of things to do. So my question is very simple. You've been investing in the ecosystem for a very, very long time. One thing that many people talk about is this financing gap. There's a financing gap. What is this financing gap in Ghana, and how is your facility sort of built or structured to solve this financing gap problem? And if you can explain as well what is so different about GIP's model that makes it work.
Thanks, Tony, and good evening, everyone. You didn't ask me to talk about GIP.
Yes.
I think it would be appropriate just to say a few words about what GIP is and what we're doing. GIP is a creation of British International Investment, a financing company that provides patient, flexible, long-term capital for SMEs. What do we mean by SMEs? I think it means different things to different people. So to put it in context, we define it by turnover, by total assets, and by number of employees. So in terms of employees, we are looking at 10 to 300. In terms of turnover, we're looking at anything up to $15 million equivalent in cedis. Total assets, same number, $15 million equivalent in cedis. So any company meeting 2 out of these 3 is an SME within the context of GIP. We are sector agnostic. We invest across all sectors except for what is on the exclusion list of BII, which we've adopted. Some of the things that make money, unfortunately, we cannot invest in them. In terms of deal sizes, we look at $500,000 equivalent in CDs to $5 million equivalent in CDs in first round funding, and we can do a follow-on funding of up to another $5 million equivalent. So in total, we can invest up to $10 million in at least 2 rounds of funding. Our tenor is anywhere between 3 to 10 years, but our sweet spot is between 5 and 7. The question that we get most is, what is our interest rate? We price off the Ghana reference rate. We put a margin on it, and depending on the product, the margin varies. So in brief words, this is who GIP is, and that's what we do. To your question, we're actually having to deal with a paradox. You have the investors always complaining about the lack of availability of bankable projects, You have the SMEs, on the other hand, talking about lack of funding. But there's money, and they believe they have the business. But that bridge that connects us is always missing. A lot of the companies we come across are not investor ready.
Please, you have to explain that. There are some SMEs in the room who would come for money from you.
Yes. They are not investor ready.
Okay.
And what do we mean by that? It means a number of things. Some of them don't even have a plan that articulates where they are, where they want to get to, how they're going to get there, and who is going to take them there. So you can imagine, as an investor, I'll be keen to understand your business, and how do I get that understanding? It comes from your plan. There's a people factor. So you talk about management, you talk about governance. How are they structured? Some do not even distinguish between their personal account and the business account. There's weak financial information. So you have all those challenges on the demand side. Then when you move on, there are other gaps around the challenges they encounter. And in the construction of GIP, we took the traditional funding structures. So you have banks on one extreme, you have private equity on the other extreme, and look at the challenges that and the limitations that these two extreme end encounters or the challenges that SME face in accessing funding from them. From the banks, you look at high collateral requirements, usually 120%. There is the issue of tenor. I think the average tenor is around 3 years, which is a challenge. The absence of flexible repayment terms, and so you tend to have fixed repayment terms, and sometimes the moratorium period isn't long enough. And so these are some of the challenges. On the private equity end, they expect some dollar returns because they take monies from offshore investors largely. The terrain is changing. There's money locally from pension funds. But until then, they look to generate dollar returns, which is always a problem for the businesses. And so these are some of the challenges that these companies encounter or face in accessing funding. And so how is GIP positioned to address this, which is the second part of your question? As I noted, we are long-term, and so we can do up to 10 years. Clearly, it doesn't mean that when you approach us, you get a 10-year facility. We have to tailor it to suit your circumstances, your cash flows. If you leave too much money in the business, they find use for it. So we help them and encourage them. You repay us, and we're able to reinvest with you. We have the ability to recycle capital, and so we can do multiple rounds of funding. So we have that advantage of providing longer tenured instruments as opposed to what you typically would find around in the marketplace. I think the second point to mention is flexibility. Flexibility around repayment. Repayment can be structured to suit the cash flow cycles of the business. Some businesses are cyclical. Take a water business, for example. You have the peak period when the weather is hot, and when the weather is cold, demand drops. We can structure and tailor your repayments to suit these seasonalities. We also recognize that you will invest in capex. Maybe you're building a factory because you are expanding. You are ordering machines because you want to expand your capacity. There's a longer gestation period, the time to order for it to come and install. So we're able to give long-term or longer moratorium, both on interest and capital repayment, that allows the money to begin to generate revenue before you commence repayment. So these are some of the uniqueness that GIP brings
Very
to
interesting.
the table. We see ourselves as complementary to the traditional funding options. We are not in competition with the banks. We can do the longer end of things and they look at the shorter end. We don't take deposits, so they can continue to offer the banking services to even our own clients. And indeed, we are nurturing relationships with some of the banks. We've signed some MOUs with a number of them.
You sound like you're solving all the problems.
Well, not exactly.
You're wearing many hats. Before I come back to you, maybe let's speak to an SME.
Yes, before we made GIP, we had these gaps that he had already described, like governance, structure, ESMS.
That's a lot of acronyms. I would have to find you. What was the key problem in your business?
So our key problem was about 3 of them. So the first one was company governance and structure. That was the key one. And then the second one was
So what did governance look like? There are some people here that don't know exactly what was there an uncle? Was it your pet named Bingo that was the CEO? Or what exactly is the
okay.
issue?
So I would say from a family business point of view, there are so many, calls at the top sometimes, and then being the son or being the first son that's taking charge, controlling the business firsthand. So there's a lot of calls
Right.
back and forth, but that was the main challenge, in us Springs and Boats assessing any type of funding like that, because any investor investing in your business will want to see that the company can make independent decisions on their own.
They don't want the board discussion at the dining table in the
No,
house.
they don't want that.
Yes.
So they want the actual structure that has a board take board decisions. We have minutes, everything is documented. That was our main challenge. And then the second one was also we had ESMS gap. That's the environmental, social, and then management system gaps. So we spoke with GHISP. They offered to support or address this issue by hiring a consultant to support us. So this guys came all the way from Kenya to help us address all these issues surrounding these ESMS. And then also one last thing was our marketing and branding. Even though we had a lot of demand, revenues were going up, our brand outside wasn't actually depicting where we actually are. So these guys came in to help us identify our state and then where we can get to, so that we're able to think long-term basis. So all of these things put together made us investor ready, and then we're able to access the GIP fund on time.
Okay. In the ecosystem, we usually call that the technical assistance. And a lot of us know this is a very powerful word. Some of the people that are here that probably, or a few friends that I met outside that I didn't know, they thought technical assistance was an expensive PowerPoint. So when you say Oracle, Salesforce, technical assistance. Let's go back to GIP. So you've heard much from the SME. Hopefully you didn't have some meeting outside before he came in, so these are very true. How does structured technical assistance that Derrick just described, how does that actually influence your investment decisions? And let's speak on the Springs and Boats standpoint. And maybe if you can share some real examples where maybe TA helped de-risk some of your investments. That's what GHISP actually does. So this will be a good time to put us on the spot.
Yeah, thanks, Tony. Maybe before addressing the question, I think there's one point I would like to make, which is what GIP also offers to SMEs, and that's the business support services. More often than not, there's a recognition that these SMEs need more than just money. money is just one, but how to put the money to good use, how to help them formalize and strengthen their businesses are all critical. And so in three broad areas, the area of governance, and I think we've been talking about it, the area of financial management, and the area of ENS, environmental and social, areas that we provide or arrange the provision of these support services to the businesses. And I think this is what links GIP to GHISP and to the SMEs. So from two broad angles, coming back to your question, there's a pre-investment support, and the question is, how has TA or structured TA assisted? Fortunately, we have a live example, that's Spring and Bolt. And as he articulated, they had issues around the environmental and social. And for us, that's a critical area. In terms of the assessment or the evaluation, it was a high-risk opportunity. And we needed that comfort, we needed that assurance that they will be able to address that gap. Clearly, on their own, they will not have been able to do that. Talking to GHISP, bringing in technical assistance allowed a very comprehensive environmental social management system to be developed. And so that was a big check or a big tick for us. Suddenly, it's been de-risked as far as that area is concerned. So that is pretty much along the lines of the pre-investment. Also, in evaluating the opportunity, we undertake due diligence, and the due diligence will identify gaps that existed. And so again, one area was governance. And we have a governance matrix that we deploy to help move the company from where they are, very basic, to advanced, and eventually to matured. So depending on the size of the company, depending on the composition of the board, is it just mother, father, and children? Board minutes held around the breakfast table or dining table, decisions minuted, to having regular meetings, introducing non-executive directors, and in some cases even insisting on having independent non-executive directors, sometimes to chair. And these are all areas. So again, through the DD, these issues comes up. And obviously it links to post-investment support, which TA has been very invaluable as far as we're concerned. So in the specific case of Spring and Bolts, as he mentioned, there was issues around branding, marketing, and sales strategy. And talking to GHP, we agreed to bring in a consultant to work with them. And so for us, supporting Spring and Bolt to invest and expand new technology, expand their capacity, the critical question was, will they be able to sell what they produce? And that is where the branding, sales, and marketing strategy comes into the picture. So a short answer to your question is structured TA has been very invaluable, and it will continue to be in these three areas that we've outlined: governance, both pre and post investment; financial management, again, both pre and post; and then ENS, both pre and post. And indeed, in our portfolio, we have 14 companies, and over half are actually benefiting from TA.
I thought
And
we'd
this
clap.
is
Everyone is looking on their phone, so maybe this will give you some exercise.
And I mean, this is to pay tribute to the collaboration between GIP and GHISP. It's been very, very helpful, without which some of the investments we've made, we will not have made them, either because they were not ready, or because some of the gaps identified would have become challenges because they don't have the capacity to do that. But let me make this point. We don't evaluate a business with TA in mind. We evaluate it on its commercial soundness. TA is a bonus, and it makes life easier. So you should have a strong commercial case before we also then try to link you up to or with TA.
Thank you so much, Jacob, for the kind words. I think we'll start with Bridget. As what makes these technical assistances lead to deal flow or lead to bankability, in your opinion?
What really distinguishes a TA that actually produces a bankable deal is it's one that identify gaps in these SMEs and help the SMEs in actually developing solutions and also help them in actually executing those solutions that they have identified. Thank you.
Amazing. Can we give her a round of applause? Okay. Let's come to Amma. I call Amma my boss. Amma, you are the most unbiased person here. Yes. Your job is quite difficult. You have a big job of making everybody behave, but voluntarily. I have a very big question for you. As an industry body like GVCA that sort of champions the private capital dispersal, the private capital governance and whatnot in Ghana, how does GVCA see its role in shaping standards, transparency, and trust, especially to improve SME deal flow? How does GVC actually support with the issue of the SME advisor here, the issue of the SME itself, and someone like Jacob who has the money to disperse? Yeah.
Thanks, Tony. And I'd like to start off by introducing GVCA. So GVCA is Ghana Venture Capital and Private Equity Association. So we are the industry body. Our members are mainly fund managers of PE and VC funds. But of course, deal flow is an issue for a lot of our fund managers, the GPs. So our work really covers all the angles in the ecosystem, the value chain of private capital allocation. So GISP has been a great supporter. So thank you to David and the team. Tony, throughout the year, we had a lot of conversations around just contributing towards what we are doing as an industry association. So we are looking at various angles to this, as you said. So the LPs are the pension funds, our domestic capital sources of capital. So how do we get them to allocate to more of our local fund managers? We have a really good relationship with AFCA, the Africa Venture Capital Association. Their knowledge exchange program is one that really engaged some of our local trustees and getting them to understand the asset class and the opportunity of really coming down the road of diversifying away from government bonds, because we have less than 1% of their assets going into alternative assets like PE and VC. So that program is something that I think has laid a great foundation for GVCA. We're looking to really, again, build on that and hopefully see more allocations as we progress with our efforts in engaging them. So that's something that we've done quite closely with GISP in some of our LP dialogues and workshops across the last year in particular. So that's one. So SME advisory campaign as well. We're looking at how we can get more affordable transaction advisors and support for our SMEs to access. Obviously, we started with the big four, but we're looking at introducing more local ecosystem players around the transaction advisory space to come in and also offer support. So again, the overwhelming feedback from SMEs is that they want more. They get very engaged when we host them for fundraising sessions, investment readiness sessions. The questions they're asking, they want to stay longer. After lunch, they want to stay. I mean, there's a lot of interest and obviously a demand for support from SMEs themselves. So I think, again, more of that in the space is welcome. And GHISP has been a great supporter in that regard. On the policy front, we've had various engagements with our stakeholders, the regulators, the government, policymakers, to really build the foundational framework for us to operate and be competitive as a jurisdiction, private equity and venture capital. We're a little bit far behind some of our neighbors, some of the more mature markets. So again, that is a huge piece of work, engaging some of our key policymakers to look at the legal and the tax incentives that have been eroded over time, restoring those and really protecting the industry to thrive and ultimately provide SME capital.
Amazing. You spoke so beautifully. Let me go back to Bridget. You just heard Amma speak. Based on your experience supporting SMEs, right, and supporting SME deals in Ghana, what's the most economic or the most SME bottleneck that you see? What should ecosystem players like the GVCA be doing to fix some of these problems in the pipeline? Again, don't look at her, just look directly at the camera.
Okay, so aside the financial issues, one of the key things that I think really delay deal flow is actually quality management and also governance structure. In Ghana, we have most SMEs that are being run by just the founder. And that is actually a very massive risk for an investor, because they don't want to invest in a business that, if, let's say, the founder is not there, the business cannot operate. So one of the key things that I believe that delay deal flow is usually that. And I'll just cite an example again of a deal that we are working on currently, which we identified during the IBA project that was last year. They are very interesting business. They do exports and all that, but their management team was not the best. The business seems to be around just the CEO. If you need, let's say, information, you have to go to him. If anything, let's say on procurement, you have to go to him. HR, you have to go to him. That was a very serious issue that we identified. So we actually handhold that SME in helping them restructure their management and also help them outsource some of their, let's say, services. And we also help them recruit people that can do the job in actually supporting the CEO and actually in running the day-to-day operations of the business. So I believe that a quality team is very essential in ensuring deal flow, aside the financial aspect, which is also very important. A quality team and also proper governance structure is one thing that I believe delayed deal flow, because investors, as I indicated earlier, once we invest in systems and structures that can outlive the founder, and also turn around the various funds that are coming in. How the ecosystem partners can actually support. Well, GHISP has been doing very well in that aspect by helping the TAs to provide services to all these SMEs at an affordable price. And that we've been doing for the past 3 years with the GHISP team, and we've actually gotten a number of let's say deals down through that. So we will actually plead with them to continue supporting more TAs in the space, for us to be able to support this SMEs to grow. Because the SMEs definitely in Ghana are the backbone of our economy. So we need to probably support them in actually living from just a one-man business to growing into a business that can employ more people and also support in the long run in the GDP of the country.
Amazing. Maybe let me come back to Amma, since we're putting the ladies on the spot now. We talk a lot about SME capacity. We've heard so much here, but sometimes we also forget that some of these fund managers also may need some technical assistance and capacity. What do you see when you have your bird's eye view in the ecosystem? What do you see is like a major gap today for fund managers, and how the strengthening fund manager capacity sort of ultimately translate to these deals being done? Maybe you can also speak on how GVCA is working to support this. Yeah.
Yeah, so our fund managers are our babies. We need to take care of them. They need food, they need water, they need air. We need to change the nappies sometimes. But basically, we need more resources to support our GPs, right? So I think that is really fundamental. If we have GPs that are exposed, experienced, they're getting the support they need, the training they need, the technical training they need, the ability to recruit people who can actually help them to set up their funds. You know, when you set up a fund, it takes sometimes years for you to actually get to your first close and all of those hurdles with the regulator, et cetera. So you need to really have a strong base for the GPs to be in a space where they can actually set up and run and manage their funds. So I think, you know, GVCA is really looking at that pillar in particular to divert resources to our GPs directly in terms of philanthropic capital grants and things like that to cushion some of the burden that's on them. And also obviously look at how we can support them with technical training, not just high-level training, but really technical training to help them to structure the right deals and manage their portfolios really well. So when we support them, when we support our regulators, when we support our industry association, generally that environment will definitely help to, you know, improve the quality of deals and the way that our portfolios are managed ultimately.
Amazing, thank you. So maybe to sort of wrap this up, the Swiss didn't just give us chocolates. They also gave us SECO. Now, they've supported GHISP to sort of ramp up the work that GHISP is going to do. Now, this question goes to everybody. I don't know whether to do it national science and maths, quiz style. You represent your industry and you just raise up your hand. But let's imagine this extra support to be a wand. And you have no parliamentary committee to vet you. What should we be doing with this extra support?
So I think, you know, what we should be doing more is to be supporting or scouting many other smaller businesses in Ghana that are doing well. They equally deserve some of these supports, and I think that can help them to also access, you know, a lot of funding and also grow like we are growing. Yes, thank you.
So we should increase our scope.
Yes.
Okay.
Scouting.
Amazing. Maybe you speak to them. Yeah, Amma?
Yeah, I would drill down on the support for general partners in the ecosystem. We need more support for our fund managers, for sure. So we are looking at our GP accelerator to help them to do that over time with our practitioners who are more experienced in the field and bringing up those who are coming into the field to manage their portfolios. So I would say that would be one. And then, of course, on the policy side, really helping us to keep driving some of the legal and the tax requirements to make this sector thrive.
From the TA standpoint, I would say that I will request for more support for the TAs to be able to probably provide services to all these SMEs at an affordable rate. Most SMEs, as it stands now, are not willing to pay for TA services because they believe that they've probably been to one or two TAs that didn't really help them get the deal done. So at the initial stages, they don't like paying for their services. So it would be good to have this, to be good to have some sort of support in that area where we can feel comfortable and also work with all these SMEs at the initial stage until they are done raising the fund. Then they can then pay us because we also need to pay salaries, also need to pay like utilities and all that. So it would be good to have that support coming in at the initial stages so that we can also be more comfortable in providing our services to all these SMEs. Thank you.
Okay, Jacob. I heard everyone say support, which means we are not doing enough. So please, I want to hear from you as well.
More is always better.
More is always better. Okay.
I think a couple of points. How affordable is TA? And you know, it's been one of the pain points in conversations that we've had. You try to bring in the best, but the best is not cheap. And so if I look at what you've done in the area of the ESMS, where you brought in teams from outside to help not just the companies, but local service providers, I think is critical. The extent to which you can expand on that, I think will be very helpful so that it becomes affordable for the companies. So affordability is critical. The other question is whether the skin in the game has to be cash or it can be in kind. Again, food for thought for you.
I know you know who to look at when you are saying this.
Yes, I know your chairperson is here. There's always the insistence to get the SMEs to put cash on the table. But you can imagine if a service provider from outside is charging £20,000, even if it's 20% of that, it can be a lot for the local SME. So the extent to which we can also train the local service providers is critical. You're doing that, but you should do more of that in terms of co-creating or developing the TA. They may have their own specific needs, and then if you can broaden the range of services that you will support in those areas. I mean, some of them need IT, management information system support, which is critical. But I think you have some exclusions. So look at the exclusions again. As you're getting more support, I think it's also important that you broaden the scope that you offer these guys. Yeah.
Thank you. Let's thank our panelists. It's been a very interesting panel discussion.